All right. Hopefully, I want to make this one a quick one because it's like 11 p.m. at night. Why am I up this late? Because market's not open tomorrow, so there's no reason to go to bed early. But this was like my probably my Thursday, Friday recap, I suppose. So Thursday was had good promise, not gonna lie. But no, so I'm trying to make this one quick because I highly doubt y'all like sitting through long ass videos, and I also want to go hop on fucking goddamn, what's it called? Fucking Dispatch for the night. That's a good ass game. Fucking the first video game I've played in 2 years. That's how good it is. But no, so okay, 201.83 is where we're peaking at, and it was a sell position, so we most likely top ticked. 201.183. Okay, so right there. Okay. I remember what we were doing. Right here. So we entered on this triple bearish. Um, we also got a SMT on another pair, I believe. Wow, that zoomed in enough. Holy. But no. So we basically like saw that we reached this kind of opening, whatever. We opened up like a $2,000 position, went here, and right here we fucking full closed because our phone got taken for trading in class. But what would have really, where would I would have actually taken my partials, you might ask? So first off, we would have most likely we wouldn't have closed anything micro, so we would have closed out probably a third of our position here, a third of our position here. So 1/3 of 2,000. We'll just do like 700 bucks for simplicity. So 700 times 1.25. Oh, I'm gonna actually have to explain to you guys why this shit, um, why we took this trade too. Shit. But no, so 1/3 of our position there. Um, hmm, hmm. Would I take a partial? Yeah, I would take the other 1/3. So plus 700 times 1.83. Now, what constitutes this being where we take partials is because, um, kind of just like the fact that if we have some sort of bullish influence, it makes sense to like kind of bottom tick or top tick part of our position here. Um, that's why I kind of like it because even if we go down, or like even if we flip, so say we flip from this point, um, like say we flipped from this point and like we just don't get a break of structure, none of that. And we're trading on this move, by the way, so let me move this over here to make it a little more easy to tell. But so say we just instantly reverse and we get no like break of structure, like fuck, confirmation, that's the word I was looking for, then we still netted like $1,000 for the day, and we have our stop loss like up here, and that's kind of how I'm profitable every day. Even if I don't catch a big move, I caught, because that's what happens every time. It might not be big money every time, but I can pretty much predict every time that market is gonna at least begin to go down or begin to go up, and that's why I take partials, because it it might be a pretty good chance that we're going down like this, but you don't know for sure. So that's how I'm consistently profitable every day, because I take partials, and then I also let part of my position run. So then I'll make more money. But no, so between those two partials, even if if I wouldn't have gotten my phone taken, even if price like didn't go back up, I mean, didn't go down any further, we would have made 2K right there. And then we would have probably closed the rest of our position here and then here. And the reason why we would close right here, I bet y'all know. Y'all are probably getting pretty smart. You can see right here, we have this high, low, higher high. That's a break of structure. We would close out the last third of our position, so like $700. And then 700 times 2.71. That right there is a $4,000 trade. Do I wish I could have taken it? Yeah. But we can't be too mad. So that's really what constituted this trade. At the time, this was around a 120% extension from here. Using our multiple time frame analysis, we could kind of assume that we were going down there. You know, these movements were during London session, which this was clearly, we took out, so London session is from 2 to like 6, whatever. There's overlap with New York. So you can see we clearly took out Asia low, which was right here. And then we also came back and took out Asia high. So we could assume that we were taking this high, which was a 127% extension, Fibonacci move. And then we could also see in that same sense, we had more bearish pressure. So what did we do? We moved down. And that was just Fibonacci retracements, and then it was also multiple time frame analysis. And that's really what tipped us that we were going down. So we knew we were going to go down, but what we didn't know was that we were going to validate this downtrend completely. So not even going to lie to you guys, going into this trade, what I was really expecting was that we would pretty much get a break of structure somewhere in here, and then we would go back up. I was expecting 50% chance of that happening, 50% chance of a new low forming. And why is that? Because we got a low and then a lower low, but in the same sense, we also got a higher high. So what we knew was that we would get some sort of retracement, and that's why we took this trade. We knew we would get some sort of retracement. We didn't know it would be downward fully, but we saw this confirmation up here combined with the SMT. So we knew we were going down. And most of the time, especially in a ranging market like this, you will at least go to 62-79% range. And then it was even better because we got that break of structure there. So that's why we were kind of thinking of that. And then from there, if we go into a full downtrend, beautiful, awesome. We can make all that money there. But then in the same sense, even if we reversed out of this zone and we got a micro break of structure to the upside, we close out of our position, net like 3K, and then we can also trade the reversal right back up. So then we could have, let's just get rid of this right now. So in the same sense as if we go down and reverse down there, now we're thinking uptrend. So in the same sense, what we can do is we can have our 127% extension right here. And if we retrace directly to this zone, we can also open up our upward trade and we can go right here. This was the last low. And then we could have targeted the 100%. Obviously, that would be half of our position. So 2,000. So then that would be $2,400 there we made. And then if we extend to here, we just made 3,000. So we made 5K that way. So either way, especially in a day like Thursday, we were in a winner's market. That's the way I like to think of it. If you're there for the opportunities, you'll get them. Whether it's bullish, bearish, it doesn't matter. So that's kind of what we were thinking for that. And then you can kind of see, and the reason why we had this 62% zone here, I can almost guarantee you that this part right here will fall in that 62-79% range, which it does right here. We clear that 79, then we start going down, and then we're just accumulating more or less. So then Friday was weird. Um, Friday we hopped on here. We were thinking bearish bias. For obvious reasons. Let me just get rid of this right here. We're obviously thinking bearish bias. What makes us think that? Well, we were kind of impartial, to be honest. But we were really just thinking bearish bias here. You know, we retraced upward to some extent, and we kind of saw that structure was shifting to bearish on the medium time frame, as you can see with this low being lower. And then you can also see that our microstructure is also lower. So that's what we were instantly thinking. So we basically, and this is honestly, this is just sometimes shit's gonna happen. So we more or less, we got in on this break of structure candle right here, which just is, this is just an unfortunate thing happening. So we got a micro break of structure because most of the time this will result in like free money, basically. You know, if you have high time frame bearish, medium time frame bearish, and then also you have small time frame bearish, then if you get on a microstructure retracement, you're probably going to be looking good. So most of the time this is going to play out in our favor. So we go to the high, and then you see we have this break of structure. We get a lower low than that low. So we entered on that. We were targeting some form of long-term liquidity. I don't remember exactly, but then you can kind of see the only issue really with this is that invalidation. We went down, and then what invalidated it was a break of structure, which we don't get until this candle, which is a higher high. So we got out here pretty much on our stop loss, which isn't really great. Like, I'm not gonna lie. Not really what I wanted to see, but par for the course. So we got in on that, and then in the same sense, we entered another position later on in the day, right on this break of structure. Then we were thinking bullish, which that's the thing, and that's why this strategy is so good. You're taking advantage of opportunities. So, you know, you trade the way down and then you trade the way back up, you trade the way up and then trade the way back down. Because that's the way I trade. I trade whatever the first big move is likely going to be, because sometimes that's all this will give you is one big move. And then after that, either I make like a quick $1,000 and then I'm in there for the next big move. So like if we're on this move down, we get in on this and then we get in on the move up, or we get in on this move down and then and then market just keeps pushing it down. So that's why top ticking and bottom ticking is so important. And that's why if I could repeat this trade, even though it was a losing trade anyways, I would have way rather been patient and waited, and instead of entering on that break of structure, I definitely think it would have been smarter to enter on a break of structure followed by a retracement into one of these zones, and then followed by a micro break of structure. So that would have been like this low right here. And then off of that, this would have been like ideal position, to be honest, I'm thinking. So off of that, we would have had our stop loss here, and then we would have been targeting, if we're assuming that market's going to stop there, we would have, right around this 38% extension, we would have taken some sort of partials. So we would have made like, probably partialed out. If we're thinking shorts at all, which we were, now would we, even in this scenario, we wouldn't take this trade because we just got a higher high, so we wouldn't take a short position. Well, we would, but we would definitely be assuming that it would just be a retrace. We wouldn't really assume that it would be like an actual move. So in this scenario, if we do take this trade, which this is 50-50 whether I take it or not, we would partial out 50% of our position because it's a riskier play. It is a retracement, not a continuation. So we probably would have taken out $500 here, moved our stop loss to break even, and we would have made $5 on that move. And then, in the same sense, we would have traded the move up, which we did sort of trade. So we would have also waited for a break of structure right here, and then enter a long position from here, and stop loss would be down here, which this is a pretty wide stop loss. I'm not gonna lie to you, definitely not that wide. I don't know why that spazzed out, but stop loss here, entered off of that, and then we'd target some sort of like 100% extension, some sort of 120% extension. This also feeds our other bias, so we probably would have made, I don't know, like fucking partial close, like a third of our position up here, which would be like a third of 2K700. So that would have been like a few $100, so like nothing substantial. Probably like half of our position right here, which would be like 1,000, so like $800 there. So that's like $1,000 in total we would have made off that move, and then left something hanging for long-term liquidity or a firm break of structure, which would be right here. So overall, there were definitely opportunities. I could have traded a little better. Friday, not gonna lie, but Fridays are really starting to become like my weaker day for market, to be honest with you. So, and that's just because liquidity, volatility, all that kind of slows down for Fridays. So, yeah, just trade smart, I guess, is what I'm going to say. And I'm not even going to do a preview because I'm trying to cut this short for y'all, save you some time, save me some time. But no preview for the rest of the week. I'm out of here.